Very good afternoon, everyone. Thank you for joining myself and Jeddave here today for webinar Get Ready for the Center Rally and Beyond during your lunchtime. We appreciate that. I know that you only got 1 hour lunchtime, but you still join us, and some of you are already on your holidays. Mine is starting soon. Yours, Jeddave?
Well, I'm taking some leaves over the year, so it's like, yeah, not exactly one long stretch, but I'm working less days than I'm on leave.
Before we get started, let me just do a quick introduction. I'm Billy Toh. I'm the head of content and investment lead with Prosperus, and I look at basically the Singapore, Malaysia, and of course the US market as well. So prior to joining the CGS-CIMB, I was an economist with Jeddave Bang, looking into the Thailand and Philippines market. So I basically have quite a bit of regional exposure, with the exception of Indonesia. And of course, Jeddave, you all probably know him from his report, right? If you've been following his technical reports on the US market, probably some of you are already enjoying your Christmas bonus. If you have not, probably it's time to change that. All right, Jeddave, you want to say hi so that everyone can take a look?
Hello, okay, so yeah, my name is Jeddave. So I think many of you guys have known me. I've been here for about 3 years in this company, right? But yeah, I've only been in this research role for about a little over a year. Yeah, so I hope the research reports have been helping you guys so far. But if not, yeah, you can just tune in. And again, any questions you guys have over the course of this session or even beyond that, can always feel free to reach out to us and me in particular as well. Yeah, I'll take your questions from there as well. Okay. Yeah.
Okay, let me just quickly go through some of the things that we are doing today, right? One of the reasons why we are doing this webinar today is because we wanted also to let you guys know about our current research that we are doing on the US market. So the question that a lot of people have is, did you miss the rally again in the US market, right? I mean, at the beginning of the year, I'm sure a lot of us heard of, the market is a bit volatile, uncertain because of the rising interest rates, whether it's going to collapse or not. But, Dow hits the record high, in nearly 2 years as rate cuts, comes into the picture, right? So, but of course, with that in mind, there are also a lot of concern, because if you look at the news article here, it says that, Bank of America actually has a poll that shows that the rate cut expectations is one of the things that's fueling the rush into the stock market. So is it all done by speculation or what? And then there's a lot of concern on the oil prices as well because of the Red Sea attacks. And then, of course, you have a lot of geopolitical uncertainties, in Middle East, then Russia, Ukraine, and of course, even the one in US and China. Of course, 2024, very interesting year because we have the US presidential election. So that's another thing to look forward to. So with this in mind, we are actually doing some of the US research articles that we hope to help you guys keep updated to latest developments on companies. So this is an example of what you see if you are our clients. You receive a newsletter from us. So on your right is the mobile version, and on the left is your desktop version. So you can see in this case is basically on the AT&T latest update on their roadmap to connectivity leadership. So we also have it on our social. So you can see from here, there's the US stock highlights that we put on our social media. And of course, on Prosperus side, you can see some of the topics that we have on a monthly basis. So these are basically some of the things that we have been doing for the US market. And we hope that you guys will be able to gain some valuable insights from there. Now, for today's session, we will actually be talking about the US market, and we will be providing you guys with some of the topics that we have for 2024. I'm not going to waste too much time anymore because I've taken quite a bit of time. So maybe, Jeddave, let's start the ball rolling by how's the US market doing? I mean, we've seen a strong momentum, right? Is that momentum going to continue from a technical perspective?
Okay, thanks for the question now. So I think with that being said, let's just hop straight into the charts a little bit. I think that we can take a look about where the market is right now. So we can see that roughly thereabouts, right? The S&P 500 is actually trading very, very close to its all-time highs, right? And we have already heard from Billy itself, the Dow has already eclipsed that already, right? So S&P 500 is pretty close to its all-time highs, around 2 to 3% short of it now. And it's been a big round trip, right? From the 2021 downswing all the way back up here. Yeah, so generally speaking, the US markets are in a very strong position. The momentum has continued pretty strongly ever since the October bottom, right? And I think that follows from another previous October bottom in 2022 as well. So the rally looks set to continue. I think the path of least resistance definitely continues to point higher. But I think as with years in which we have rallied strongly, right? I think I would generally say that the first part of the year tends to set the kind of trend for how the year would really go. And we do definitely expect a bit of pullbacks every now and then, right? So I think if we look back towards, let's say, when we talk about the previous downswing in 2022, right, we can see that it started off with a bit of a, from the rally in December, it started off with weakness in January, right? And that weakness in January actually kind of ended up parlaying into the rest of the year, right, whereby we see it just kind of bleed all the way until around October period, right? And I think one of the telltale signs that the markets were a bit stronger, especially from the 2022 to 2023 period, was when we saw actually coming off a very nice December rally, we saw a little bit of a pullback towards the end of the year. But the pullback found pretty nice technical supports, right? And we rallied from there, right? We had a very, very nice strong January up until early February, right? Whereby we tested some key levels of resistance again. So I think that really set the tone for where the markets moved. And that's where we saw a lot of a lot of price action start to come into play, whereby we saw the markets have this pattern of higher highs and higher lows. We start to see when they retested supports, they didn't really break these supports, but they actually tended to hold some of these price levels and supports. And I think all these things does tend to come into play, right? So when we look at next year's market, right, especially when you talk about the possibility of Santa Claus rally this year, and Santa Claus rally tends to be around the near December period all the way towards the end of the year, right? The expectation is that could actually play out, right? But the question for us to answer, right, is whether that will continue. And my general take is the path of this resistance for now is still higher. So we might still look at the markets going higher. But when the pullback starts to happen, right, I think that's where we will start to need to question, which is whether it starts to come in January or February or so on and so forth, right? We need to start to see whether it will actually break some of the support levels or the previous breakout points that has previously been there, or whether it will be able to hold some of these previous breakout points. And I think if you look at it on a bigger picture scale as well, right? Let's say you flip to a weekly chart, right? I think that's where a lot of the technical worries also come into play. So you have a very, very bearish camp as well, right? That look at this whole period of downswing to upswing as a very, very huge double top, right? And I think in technical terms, double top tends to be a very, very bad harbinger of a lot of negativity towards the next phase of the markets, right? So I think that's where we have a bit of divergences, whereby we see a lot of very strong momentum, but yet we are also rallying right into previous all-time highs, right? And the previous all-time highs, should they hold as a resistance, could actually be something that really worries a lot of investors. So I think these are some of the key things that I will take note of looking towards the end of the year.
Okay, I thank Jeddave for that. All right, just for those who just join us, just to let you guys know, for this webinar, we will not be sharing slides. Basically, it will be conversation between Jeddave and myself. So if you have any questions along the way, just feel free to type it on the Q&A box, and we will answer them, right, when we can, right? So basically, along the way, if you have any questions that you want to ask us, go ahead and ask. Right, I like that. I mean, the fact that you are quite positive on it, as at least in the near term, that means that there's still time for us to really jump on board, right?
I think that is a very loaded question in the sense that you have to be very, very selective. And I think currently the rally is really, really pretty extended. That is also very true. So I think we have to be very careful in how we choose to pick and choose, right? There will be stocks in which there are nice big winners as well. And there will be stocks in which, there are, towards the tail end of the rally. So I think that's where we have to really watch some of the rotations that are coming to play, right? And I think some of the areas in which that have been underperforming are beginning to show recent signs of strength. And I think like one of the next charts that that we can really touch on a little bit, right? So Russell, right? And why the Russell is because Russell is the small caps, right? And the small caps have been very, very heavily underperforming the S&P 500, especially over the course of 2023. So when you look at 2023 as a vacuum, right? Like you can see the S&P 500 has been in a very nice, higher highs, higher lows, right? And the Russell in comparison, right, has had this very, very wide, sideways move, right? In which you can see that, the upper ends are here, the bottom ends are here, and that's the entire 2023 in a vacuum, right? And so we are showing some sprouts of positivity that we might be breaking out of this, like, sideways consolidation pattern. So there might be some legs to run in some of the more underperforming sides of the market. So that looks like, looks more into maybe the smaller caps, or the more value-oriented side of the market. The mega caps and all, it might have run its course. I think, again, that I say that with a bit of caution, right? Because the mega caps can possibly still continue its rally. But I think that's where we need to be a bit careful, right? It's not just, let's close eyes, blindly pick any stock, it's going to be rallying. I think we might need to be a bit more selective in stock picking. Yeah.
Okay, noted on that. Just to add on some bullishness to what Jeddave has been saying, right? Don't forget that 2024 is going to be the US 2024 election, right? Historically, I mean, some of us look at it as a bad thing, some of us look at it as a good thing, right? But if you look at historical data, the S&P 500 has always been up by about, I think, 4% on average in the 12 months leading up to presidential elections since 1984. This is taken into consideration some of the very, very bearish years. All right. And 2020, the S&P 500 actually gained 16%, during the Donald Trump and President Joe Biden campaign period. So that's something that we wanted to look at as well when we look into 2024. But we do have some questions now, right? So which is under negative big counter in NASDAQ? All right. Maybe I'll just give my view first on this. Jeddave, is that fine with you?
Yeah, please go ahead.
Yeah, so I think if you're talking about the NASDAQ, I think the tech sectors, I think my personal view is that most of the tech sector, especially those who have involvement in the data center and AI, will continue to benefit, because I think this is a structural growth story. Whether it is 2024 or 2025, and we see real materialization of some of these things, that is a big question that we will know as time move on. But I think in terms of the big negative, I would put in probably the likes like Tesla would probably be one of them. Reason being, of course, I think if you look at Tesla, I think every year Elon Musk will tell analysts that this is the year where it becomes the automatic car will comes into life, right? So I think there is a lot of expectations on in terms of how the EV cars is going to do. And if you look at the competition, is becoming more intense, especially in terms of pricing and everything. So I think that's going to be something that will affect, especially if you talk about the big tech companies. So that's my big negative that I'm looking into. You want to add on it, Jeddave?
No worries. Okay, so I do largely agree with Billy's take, because I think in terms of the big tech companies as well, many of them actually still have some legs to run in terms of the momentum from AI. I think my worry and my concern is that a lot of these projections are forward-looking, right? And I think like there have been some companies that have very, very big outsized growth this year, and that's where my concerns start to come into play, whether the valuations actually are really going to start to match some of the earnings projections are going to start to come in now, right? So I think some of my concerns will actually lie in companies like Nvidia, right? For example, where this year has been a runaway growth year, right? Nvidia is like far and away one of the best performers of the market, right? And it's very, very heavily extended. So the question now for me is like, for companies like Nvidia, can we continue to see that kind of growth trajectory? I think it's really, really difficult to say. And I think that leads to a bit of fears for me, right? In that we might be looking at a bit of an extended kind of a bubble-ish kind of rally starting to build up in terms of the AI momentum. Whether that be that the rally has run its course and it's over, or that we might see yet another leg to the rally. I think I'm more on the camp that there might be another leg to the rally, but we do have to be very careful that might change course anytime soon now, right? And I think one of the other areas that we can possibly keep an eye on now, right, is when we look at price to book earnings, right? Like, and I think price to book earnings, if you look at it, right, and this is over, I mean, from 2000 to 2001, right? We can actually see that we are actually trading pretty close to the valuations of like the 2000s, right? The price to book ratios. So I think we are getting very, very heavily extended in terms of the rally itself and where we are. And that in itself might be a bit of a question mark whether we can continue to trade at this high price to book values, right? So we have to be very careful about all these things.
Very bold call to put Nvidia as the big potential big negative, huh?
I mean that's something that I think I'm just keeping an eye on. Of course, I'm talking about in 2024 and beyond, right? To me, is that I think 2024 still has some legs to run, right? My own general take is that I think 2024 is going to be a positive year for the markets, right? And especially with what you have mentioned as well, the seasonality and everything coming into play. But I think we do have to be very careful with some of these names that have really, really run very high. Yeah, that's my own concern. Yeah.
Yeah, price is what you pay, value is what you get. So valuation always matters, right? All right, we do have questions on the rate cut. I think we talked about it just now. Currently, market seems to reflect 6 cuts for next year. First cut in March and 3 cuts in the first half of 2024. While Fed only communicated 3 cuts. What will happen if the reality comes when first cut is in second half? Would that mean a big market big drop? Would that be the case? You want to take this first, Jeddave?
Okay, maybe I'll just flip over to the chart here, right? I think the markets actually are really pricing in a lot of cuts and a lot of positivity around that, right? And dovishness. And I think generally speaking, right, when we look at the Fed's, the FOMC's own projections, right, this is from their previous meeting, right? Like the meeting before the last one that we had in December, and this is actually the current one. So you can really see that the dovishness actually really has taken shape. especially in the short term, right? So you can see that the short end of it, right, is definitely a way steeper cut or a way steeper cut pace of cuts that are expected. This is a medium projection, it's not the absolute projection, it's a median one, right? And so generally speaking, right, the higher for longer mantra is definitely something that we still need to keep in mind, but it's only, the higher for longer will really be looking at far out, right? We are talking about 27 and beyond, right? But up until that point, right, we are looking at this the projected rate. And to me, is that currently the markets are a bit overly bullish on some of these things. But yet at the same time, we also have to bear in mind that the rate tends to take a little bit of time to kind of process. So what's happening right now is that the rate hikes have all started to play its course. It's not fully played out its full course yet, and the full impact of the rate cuts has not even hit the economy yet, right? So I think that's something that we have to start to keep in mind now, right? When the rate cuts, the impact of that start to hit the economy, we'll start to see the valuations and growth start to look a lot better. And so that in itself could actually provide the next leg of the markets, upswing. But then the question mark is, how much of the valuation justification will there be, right? And I think that's the tension that exists in the markets. And it's a very, very good question indeed. Yeah, my own take is that I'm looking at it in this sense, and I'm seeing it as that it's going to be something that we will still see another leg, but it could really be a short-lived one. Like by the end of next year, we might be looking at some challenging times ahead. I really don't know. Let's see. Really?
Let me just add on it. My own personal take is simple, right? I mean, I think the interest rate has an important role to play. But it's only partially. I mean, look at it. Let's be honest, right? At the beginning of this year, how many rate hikes are we talking about, right? So everyone was concerned about that. But if you look at it now and compared at the beginning of this year, the market has still gone up, right? So it has actually improved and recovered. So the question is, it's not just so much about the interest rate, it's also about how well these companies can continue to perform. I think valuation will matters. I think that will come into picture this year. It will be more important. So I don't think it will be across the board where you see winners everywhere. I think it will be more selective. So I agree with you. I think NVIDIA will be at the level that is probably a bit too expensive at this juncture to take on that sort of risk. So that's why you put on the big negative. So I do think that that's one of the reasons that, we have to keep an eye on it. So I think another question is any bad impact of Google Pay compensation in recent. Sorry, is that a complete question or what? Do you understand that, Jeddave?
So I think not very much. So actually,
yeah, sorry, if you don't mind, you could just retype the question so that we can actually look into it. All right. Like you say, the S&P has ran a fair bit and the yield curve is inverted for a while. Is this not a bearish indication? I think this is for you, Jeddave.
Yes, I think okay. So generally speaking, right, when the yield curves inverts, right, okay, maybe what I can do is that I do think I have a yield curve chart. Just give me a shot. Well, let me see whether I can find that yield curve chart. Okay, so before that, right, okay, I think just to continue to answer your question while I'm finding the chart, right? Okay, so generally speaking, the yield curve inversion tends to be that, when it's re-inverts itself, that's where we actually see a lot of the negativity start to set in a bit more. Okay, so like when you look at, okay, so what you are seeing right now on the screen, right, is actually the current yield curve, right, 10-year minus the 2-year. So that's generally where we look at where the yield curve lies, right? And when you look at the 10-year versus the 2-year, right, yes, you are right that we are pretty heavily inverted. And let's look at it on a monthly basis so that you can get a grander scheme of things, right? But I think when we project it versus the S&P 500, right, I think what you'll realize is that it tends to be when the yield curve fully rights itself, right, that's where we start to see a bit of the market swing downward. And I think that's where my big concern will lie. So like currently, while we are still looking at the yield curve being inverted, right, like I don't think it's going to be that big a deal. I think it's when it starts to right itself that will be where my big concerns lie, right? Okay, so I think this chart should give you a pretty good idea of what I mean by that. So when you look at the 2000 to 2002 period, right, which is your big tech bubble burst and everything, right, and so the initial swing of it, right, you can see that there was an inverted yield curve. This first line, this 0% here is the first point where the yield curve rights itself, right, after the inversion. And when it rights itself, right, you can see that that's where we start to see the continued downswing on the market, and that's where we see a big down draw. And I think similarly, you can see that in the 07 period as well, right, where the yield curve inversion starts to right itself, right? And from there itself, you also see that once it starts to rewrite itself, right, fully, that's where you see the full impact of the downswing of the market as well. I think that's my big concern, right? For now, my initial worry September, October period, right? Especially when the market was in full downswing, right? Before it started to right itself and bottom out in October, was that we are looking at the markets actually start to really, really right itself. And the inversion threatened to actually reinvert and normalize, right?
Yeah.
But yet it did not normalize, right? So that in itself tells me that we are still in this phase of waiting out for this big to me right, this big normalization. And to me my big take is that once the normalization starts to take place a bit more, I think on a longer term basis, that's where we have to start to be very careful about it, right? Because I think that's where the main impacts of like the inversion to normalization starts to come into play. Yeah, so for now, my own take is that it's not yet. Yeah, but we have to wait out and be very careful because it could be coming pretty soon.
Okay. All right. Thanks for that. I think the next question, before election in US, which counter need to caution or crash or fear sell? All right. Let me answer this. I think one of the things that, when I talk about this, the US election is also, I want to bring this. I think when you mentioned earlier about NVIDIA, I think it's not just NVIDIA. I think companies that have exposure to China, for example, like Apple, I think even Tesla, those who have exposure with Chinese, I think they will be a bit more at risk because, as we reach the nearer to the US election, there will be a lot more rhetorics in terms of the policy. I guess the US and China, while they are probably better now in terms of the relationship, there's still a lot of friction, especially on the tech side. So I think that's where you have to be very careful about, companies with exposure in China. So I think, for example, in recent times, I think we've seen the Chinese has actually, government has actually banned the usage of Apple iPhone. So we probably see a lot more on that front, right? Coming from probably the US side as well. And we should see some response from the Chinese government as well. So that's where we have to be a bit more careful. I think that's where the big risk is, because given the valuation that some of these tech players are, right? So a lot of expectations are riding on this stuff. And I think another thing that we have to probably look into are probably the defense sector, like the Lockheed Martin and the rest, because I think some of them have done pretty well, because of some of the war that we're seeing. But because there's a lot of uncertainties in terms of how the government will position themselves. So that's one area that we have to look into, because these companies have a lot of reliance on the government rather as compared to the usual. If you look at Coca-Cola, or maybe even Microsoft, there's a lot less dependency on Chinese counterparts. So those are areas that I think will be less exposed to that. So at least that's my take. You want to add on this, Jeddave, or you're fine with it?
No, I think that's a very, very good answer, Billy. I think we can go on next question. Thank you for the good answer.
Yeah. Do you mind showing the chart for the oil?
Which one do you want? Coca-Cola?
No, the oil, because I think the next question is on the oil industry forecast.
Oh, okay, yes. This is okay. So the chart I'm showing is the USO, right? USO is an oil fund that tracks the price of oil. Yeah.
Yep. All right. I don't have the number from economists, but they actually do report the number. So this is purely my view. It's not the house view on this front. I think the oil industry could, if you ask me, I think the big question is really in terms of the geopolitical situation in Middle East. I think as long as that is not too bad, I think the pricing at this level is comfortable. I think demand will gradually pick up. I don't think we will see a sharp recession in 2024. So I think that things should normalize. But of course, if they are, if things were to escalate in the Middle East, and then situation might be different, right? So that could cause the spike in oil prices. So those are things that you probably want to keep an eye on. So that's my take on this. In technical, do you want to share, Jeddave, on the oil?
Yeah, sure, Billy. I'll just do a very quick sharing for the technical side. I think you covered very nicely the fundamentals of what we should look at for oil. I think on the technical front itself, I think something that we have to be very cognizant of is oil is kind of in a more downward phase of it is very, very clear from this, right? There's a very clear downward probe of this wedge itself, right? And you can see that there's also this downtrend overhead resistance that has been in play, right? And continues to be in play. You are trading below the 200-day moving average. All these things are pretty negative signs. You are having your lower highs and lower lows. So for now itself, oil definitely still seems to be on a downward trajectory. I don't think there's been a bottoming pattern that I can look towards yet that can tell me that oil is going to reverse course anytime soon. So my own take is that oil technicals wise should probably find some degree of support to me, right? And the last point of support, which is around the $64 region, right? To me, this 64 to 69 region below the 200-day moving average for now is a very, very comfortable level. So I do mirror your view, Billy, and I think that unless we are looking at any major political event, we probably would see oil near thereabouts this price for a period of time.
Okay, this question is on NVIDIA. I think this is a very bullish question, asking whether NVIDIA could hit 1,000 in the next quarter, 2024, after AI clarification. My take is no. I think it is too expensive at this juncture. I think NVIDIA is priced at a level that is everything that is positive. But just for the sake of the audience, right? Before you go into the technical part of it, Jeddave, aside from NVIDIA gained about 200+%, I think, this year to date, the total return of NVIDIA. But there's another company that has actually done better than NVIDIA that a lot of people did not notice, which is MicroStrategy. So I just want to bring this question up because someone asked about Bitcoin. So MicroStrategy actually gained about 300+% this year to date. So actually done way better than NVIDIA. But we talk a lot on NVIDIA rather than companies like MicroStrategy, but that's really because of the rally that we saw in the Bitcoin. And for those of you who are interested, because there's a question on how to actually benefit from the rally in Bitcoin, right? I think you can actually look at a few ways. One is the ETF that currently has. I think one of it is a Valkyrie Bitcoin miners ETF. So that one is basically focusing on the Bitcoin mining industry. So that's one of it that you can look into. Another one is really investing in companies that have exposure in Bitcoin, like MicroStrategy, because they have actually dedicated their balance sheet to acquire Bitcoin. So they actually hold quite a bit of amount of it. So when Bitcoin do well, they actually do well, right? So then, of course, you have your Coinbase Global, which is basically an exchange. So that's another one that you can look into. And of course, back to NVIDIA, right? NVIDIA will also benefit from it if, the Bitcoin continue to gain momentum because of the GPU that is required in the cryptocurrency mining process. So that's really just another thing I want to add on to it, because I think there was a question on the Bitcoin. In terms of whether we will still see rally in Bitcoin, I don't really study in terms of the fundamentals, but my take is that I do think that an exposure will be great, right? So one way to do it is to do it in the multiple ways that I talk about just now. And of course, if you with Prosperus, you can also buy the cryptocurrency exchange that from the platform itself. Yeah. So you want to add on the technicals for NVIDIA?
Okay, I think just to give you a very, very quick picture, right? So this is the extension of a 200 from, if we track the previous high here, right? This region all the way from below to up to this high, right? And we extend upwards to about 200% now, right? It's around this $600 region, which to me will be a pretty my own take that will be around the cap of what I think where NVIDIA could go in the next year or so. My definition of extension or being heavily extended will be if we hit this near 260% and even beyond. And $1,000 actually is really, really heavily extended. So like my own take is that it's not impossible that NVIDIA will ever go to these levels of $1,000 for instance, right? And we are talking about it on over a long-term basis, maybe, but if you're talking about it on the next year, right? So it's
next quarter.
really, really difficult to say.
Next quarter, 2024. A bit too fast.
Yeah, exactly. 2024 was a really, really short time.
That is just our
jump 100,000.
Yeah, but what's the support level for what's the resistance that you're seeing for NVIDIA? So that
I think NVIDIA the first support resistance for me, right? Because we are already, if you look at it on a daily chart, right? Let me just flip back to the daily chart, right? If you look at it, we are still right around the previous all-time high levels, right? Which is around this $505 region, right? So we have not broken clear from that yet. I think some of the signs that are good is that we are seeing a bit of from this period of consolidation, we are at least seeing some degree of support. We are seeing the 50-day moving average hold as a support. So I think there definitely is a bit of a leg next, right? But this 160% level is definitely a level that is not fully broken out from. And I think above that, as I said, right, the next level that I'll be keeping an eye on will definitely be nearing this $584 level, right, which is going to be the 200% region. So I think anytime it hits near, once it starts to break out from here, I think the target of this 200% definitely is a viable one, but you have to be very careful again, right? And keep an eye out for any topping pointers. I think that's my own opinion of it. Yeah.
So 580, that's the more or less the resistance that we will be careful on, right?
I think that's the one that I'll be looking out for. Yes.
Okay. I think there's a question on rate cut that is expected next year. Is it being factored into the analysis? Yes, I think part of the reason for the bullish market is due to the expectations that the Fed has come out and said vocally that they're gonna cut. They didn't really say that they're gonna cut, but the projection shows that they're gonna cut, right? So that's really what has been driving the market. I think there's
Yeah.
another one on the technical as well. For the chart moving average crossover, is it 50 and 200 or?
Sorry. Let me just go and see the question. Wait.
Yeah, it's because it's very technical. So
Oh yeah. Sorry. Okay. Yes, it's on the S&P 500 one. Yes, it's a 50 and 200 day simple moving average. Yeah.
Okay. And I think there's a question on bearish and bullish stocks. So okay, let me just talk about since they're asking that question, I'm just going to talk about the 5 top picks that we have for 2024. So basically this is my view in terms of what investors can look into. And when I look at top picks, I usually look at it as a portfolio, meaning I'll try to be a bit more balanced so that the 5 stocks can actually more or less cover one another in a more diversified manner. So the first one that I have is really on Microsoft. I think Microsoft is strongly positioned for both the cloud AI growth, and I think structural growth here is key because a company like Microsoft has shown that they are best at infrastructure as a service. The business model has shown to be very resilient. So if you look at it, Microsoft is one of the first companies that have actually monetized on the generative AI wave due to its close relationship with OpenAI. But not only that, I don't think it's just because of that growth itself. I think it's also very resilient because of the steady growth of its Office 365. If you want to know how steady it is, the margin that Microsoft has is at about 47%. That's how good they are. And I think growth for the cloud, their Azure is very strong. I think if you look at it at the moment, growth is at around 34%. So next year, there will be a bit of slowdown expected to drop to normalize to about 28 to 30% level, which is still very strong. And bear in mind, only about 3% contribution now for Azure is coming from the AI related sales. So that this is based on the latest numbers in the first quarter. And in the near term, they are also releasing the Office Copilot, which is they're going to be charging $30 a user a month. So this is basically just for commercial user base, right? So just by taking an assumption that only 3 to 5% of this user base will adopt in the initial stage, this will add about 3 to 5 billion into sales for Microsoft. So that's we haven't even considered that they're going to bring it to the consumer market as well. So currently they're actually doing testing mode already. And they also have an exposure not just on the commercial side, but also on the developers community for GitHub. So that's also where they can earn, because they're also going to release their Copilot, which is charging at $19 a month per user. So currently that itself is already generating like a billion in revenue annually. So that's something that, that have a lot of recurring revenue across different business model that allow them to be very resilient in this level. So I think there's also one thing to look into is that their gaming portfolio, that they're actually acquiring Activision. So that's likely to boost another 9 to 10 billion in sales during the first year. So of course, with this in mind, right, margin is probably going to come down a bit because of the new acquisition and all that. But at 47%, even if it come down slightly, it will still be at a very strong and comfortable level. So I think that's my take on why the top picks is Microsoft is there. And of course, the resilience in terms of the less of it, compared to a lot of the tech companies, Microsoft is less reliant on China. Exposure in China is probably close to none. So there's not a lot of exposure there as compared to the likes of Apple and all that. So that's where you have a lot of resilience on the front. Then of course the second one that I go for would be Disney. I think that Disney has a good comeback story that is underappreciated. I think the turnaround story has come a bit slower than I anticipated, but it's coming. Especially you look at the right people are coming back into the leadership role. So at current level below 100, I think it's a very good price entry for people who wants to have acquire a brand that owns the likes of Disney, Star Wars, and all that flagship brands, and their parks are gonna be releasing more. Pricing have already gone up actually. So you have seen a lot of improvement on that front as well. So that's another area that we want to look into. Of course, the downside to it is that the streaming business is still not profitable, but they're targeting to turn around by the end of the 2024. So that's something for us to keep an eye on to see if they can deliver on what they promised. And the third one is I would go for something that is more defensive. I would go for Bank of America. If you know, Bank of America is 8% owned by Warren Buffett, right? So those of you who do not know, we talk about rate cuts. So that's probably bad for Bank of America. But I think that the idea is that you don't want to be overly bullish on one side of the story. And I think Bank of America being the second largest US bank with over 2.5 trillion in asset, that's a big benefit. They have I think they have their asset management and wealth management business to help to provide a more resilient business as well. So that's going to keep Bank of America supported. So I think that's one companies that I'll go for together with the two that I talk about, Microsoft and Disney. Then the fourth would be Coca-Cola. I think Coca-Cola has continued to prove themselves to be one of the strong beverage company globally. I think they control about 46% on the market share for the carbon drink. So that's one thing. But more importantly is that the company has been able to generate consistent growth. I think they're expecting about 10% growth this year. And they have been growing their dividend over the last 60 years, more than 60 years. In fact, I think 61 years or so. So that's something that we want to have to create a more diversified and resilient portfolio. And the last but not least, I'm going with Intel. I think there's a question on Intel as well. I think Intel is a story that is usually overlooked due to the struggles that they have over the last decade, right? Because they've been overtaken by AMD, they've been overtaken by Nvidia, and of course there's always that challenge whether they can come back in terms of the on the leadership front in terms of innovation. But I think one thing to take note of when we look at tech companies, and personally I look at it a lot, right? So I spend a lot of time to listen, not just in the terms of the financials but also the products and what the management guidance is. And since Pat Gelsinger returned to Intel as the CEO, for those of you who do not know the man, he has been with Intel for 30 years prior to leaving to VM as the CEO for 8 years. And when he come back, this guy is an engineer, so he has a lot of technical skills that the previous CEOs of Intel are lacking. And he has set a certain target to create 5 nodes over the next 4 years when he came back in 2021, and he has managed to achieve all of the targets that I've been talking about. So this is one area that you want to look at, and their IDM 2.0 strategy has helped them to cut, I think, close to 8 to 10 billion in terms of operating costs, so that they can focus on their R&D investment. So like in previous time, if you look at Intel, a lot of investments, a lot of the cash flow are being put on OPEX rather than CAPEX. But right now we have seen a shift in that. And I think if you follow closely, they have also released their AI chips, and they are also not too far off behind both AMD and Nvidia. So this is something that I think investors will be very interested to consider. So the top 5 picks that I'll go for 2024 is really Microsoft, I think Disney, Bank of America, Coca-Cola, and Intel. So these are 5 companies that I'm quite positive on. In terms of the bearish one, I think I would go with Nvidia. I think, and of course, Tesla. So I think the reason is because valuation matters. I think valuations is a bit on the high side to my liking. I think there is a lot of risk that can come into for the company. The reason that I talk about, I think right now the US government is actually looking into Nvidia for some of the chips that they're going to do with China. So I think this sort of issues will probably escalate as we reach the US election campaign for nearer. So that's something that I will be very afraid of. Of course, I think Tesla is overpriced. I think for an EV car, I think there's a lot of better alternative out there in terms of valuation. So yeah, that's my call on that. So Jeddave, if you want to add?
And thanks a lot, Billy, for giving a very, very good big roundup over a lot of these stocks that we are thinking about, right? I think for myself, right, I think my own caution will be just not that the stocks that Billy has picked is bad, but I think the timing of entry matters. So I think just be very careful. I think some of them are reaching resistance levels, right? So I think, like, for instance, like, let's say when you look at like stocks like Coca-Cola, just be very wary that it seems to be testing around resistance levels. Whether they can fully break out from them, that will be the point where, if you ever do want to enter, you want to probably enter around those breakouts. You don't want to enter when it's on a downward move, right? I think so. Just be very wary, right? And I think another one, for instance, will be like, for instance, Intel, right? And I think one of the worries I have is that it's flashing a bit of a bearish divergence, right? Whereby the RSI is moving lower while the price is still moving higher. So short-term wise, does look like it's going to face a bit of issues. You also can see that there's, 2 of these style of like hammer candles, so to speak, right? Inverted hammer candles, where inverted hammer candles tend to signal a bit of a short-term downside as well. So if I were to look at Intel or something like Coca-Cola for now, right, I definitely will be more on the bearish or the short-term basis. Yep. So I think if you want to enter them, right, I would say that just don't need to enter fast. Right, wait for the pullbacks. Some of these pullbacks happen because some of them are really at pretty clear resistance levels, and enter them wisely, right, at points in which it has reached a nice pullback and presents a nice opportunity for further upside.
Yep. What's a good entry level in terms of the support that you want to share? So that
okay, so I think for something like Intel, right, a very clear entry level will be around this 60% retracement level, right? So this very big bounce that you see, right, is actually tracking the entire downswing from the tops in around 2021 all the way to the bottom in around 2022 to 2023 period. You can really see that it's actually very, very nicely contained within this box now, right? And you can see that a very clear bottom around this 2023 period can be seen when you can see around 3 tests of the same support level, right? And from there itself, around early Feb period, right, we can see that Intel has actually been doing pretty well, right? And so like holding above the 200-day moving average and a pretty nice support around here. And I think like now it's shot back above the 60% retracement level. It's tested it again and it has continued to pull higher. And I think this 60% retracement level will present the first initial point of which, if it holds, it presents a nice opportunity. It would probably align around this 50-day moving average as well. So it would be less stretched and less it hasn't pulled ahead as much, right? I think another sign to look out for is that if the RSI keeps above 40, right? I think as long as it keeps above 40 in this exact pullback, I think we are looking at a very, very nice pullback that it presents a nice opportunity for further upside. Yeah. Something like Coca-Cola itself, though, I think something else I'll be looking out for again is the pullback to around the 50-day moving average, right? Similar thing, because the 50-day moving average presents around this consolidation area around the $57 to the $56 region now, right? I think another point of it is that it's also from overbought levels, it's re-entering this more consolidative zone now, right? And as long as the pullback keeps above 40 right, for the RSI itself as well, I think you're definitely setting up for another nice leg. So I think these are some of the consideration points I'll just be wary about.
Okay, thank you. I think there's a question on the support level for NVIDIA. I think just now you talked about the resistance. We probably didn't mention the support level. You probably want to just highlight that?
Okay, sure. Okay, so NVIDIA itself, right? I think when you talk about support levels for NVIDIA, you probably want to keep an eye out first of this near 1.4%, 140%. It's around the $445 region. Reason being is that you can see that that's an area in which, right, when you see this previous downswing, it's right around there. It's also near the 50-day moving average as well, right? So this will be a first region I keep an eye on now, right? And if it continues its move lower now, right, I think the next point will definitely be, you can see that there's kind of 3 tests of this support around this 120% level. It's near $400. I think that would be the next point of which I keep my attention on, because this near $400 level, right, it's also the 200-day moving average where it could possibly end up around. So I think just be very wary of these 2 levels, right? And my take on when we totally do not want to play around with NVIDIA is around this $400 region if it breaks. Because if it breaks the $400 region, you're breaking a 200-day moving average. Generally speaking, my own take is that you'll start to possibly cover more of this gap, which could possibly present, closer towards the $320 level. Yeah, so just be wary of the 200-day moving average, especially. That's my own take.
Okay. I think there's another question in terms of AMD. I think you talked about Intel already. All right, in terms of valuation, AMD is definitely expensive because it's currently trading about 500 PE, I think. So compared to the average, it's about 100 plus to 200. So that's something that we probably wanted to. Sorry, it's the 5-year average is below 100. It's about 80. So that's really expensive in terms of valuation wise. I think from a technical charts point of view, Jeddave, if you just want to add in, give a bit of color.
Okay, technical charts point of view as well, I think on a very similar take now, right? Because from something similar to Intel is that you can see that it's testing a bit of a resistance level, right? So this $140 is kind of presents as a bit of a resistance level, the 70% retracement level. And I think outside of that itself, you're also seeing a bit of a inverted hammer kind of pattern as well. Again, tends to signal a bit of a short-term weakness, right? So I think you are presented to me now, right, with a lot of these AI stocks or a lot of these tech stocks are actually hitting a bit of a resistance level. And I think whether they can continue to push through is going to be a big question mark. At least in the short term, to me, we might be seeing a little bit of a pullback, right? And my next point of pullback will be actually around this 60% retracement level, right? And this 60% retracement level presents around, it's a previous breakout point. And I think it's also an area of which we have previously found resistance around. Yeah, so that will be the point of which I would first consider, if we can hold around that region, I think another leg higher, again, is a possibility. The point of no consideration again, right, for a stock like AMD to me is when you start to break some of these like 50% retracement level and so on. This 50% retracement level, right, would likely be around below the 50-day and below the 200-day moving average. And that in itself will actually be a pretty bearish sign now, right, where I think we could take us back towards under 100.
Okay. All right, thanks. I think we just take one last question, which is on the Meta. I think do we expect the trend to continue towards the first quarter? I think fundamentally, I'll just probably mention this. I think in terms of earnings wise, Meta has been doing pretty decent. I think there's a lot of negative news back in 2022, which is why the share price is actually is more like a recovery rather than because of a strong momentum per se. Valuation is at a very fair level. I think it's about 20 plus, which is similar to his 5-year average. So I think it's okay in terms of valuation. But I just want to point out because of the 2024 election, I think when it goes near, there will be a lot of questions on companies that are social media. Are you managing your censorship? Are you making sure misinformation? Those things will be an issues for companies that are involved in this business. So I pass to you, Jeddave, on the technical front.
I think very, very wisely said, Billy. And I think this is just a question I'm just going to pose to you. I think I'm just thinking out loud, but my own take on Meta actually is that we should start to see it less of a growth company and more of a value-based company. Do you think you agree with that statement?
Yeah, I think so. I believe so.
Yeah. Okay. I think one of the reasons why I say that actually is because one of the things that we tend to forget about Meta is that they are generating a lot of cash flow. So it's not just a company in which it's just about growth, right? Growth isn't the primary thing that Meta is able to do anymore. But one of the primary things that Meta is able to do is to continue to upkeep its revenue, right? And I think that's why I look at it more as a value-based company rather than a growth one. And I think if you look at it on the technical front, right, I think the pattern of higher highs and high lows definitely has been pretty ongoing, right? And it continues to remain there. You are seeing it run into a first line of resistance, right? I think, or another line of resistance, not first line. And another line of resistance is around this $350 region, right? And I think that presents the previous tops, right? Or the previous rallies counter rallies that kind of found resistance and failed to break through and continue its downward move, right? So that will be around this 2021 period itself. So to me is that if it continues to be able to break through some of these resistance levels, I think all-time highs is definitely not out of the question. My big worry again, right, is just like the S&P 500. Could it be setting up for this very, very big double top? And I think that's going to be a very big worry. And if it does reach that top and fail to break out, I think the first point you want to reach out for is this $350 level again, right? But I think first you have to break out from 350. On the downside wise, right, I think just be very wary of this 160% level, because this 160% level is actually also near your 50-day moving average, right? So if you start to break this 160% level and the 50-day moving average, right, you are starting to break down towards, I think, and test this near $280 level. That presents near the 200-day moving average, and of course your previous downswing, supports from your previous downswing, right? At the bottom of it, you can see it's around this $200.80 level. Right. Any further downside from there, I think definitely we are looking at it on a more closing in on more of a bearish phase already. Yeah.
Okay. Just to add on what Jeddave said, I think as a value stock, but there's of course one thing that's missing, that they don't give out dividends, so that's something to look into. But they do share buyback since I think 2017 or 2019. I can't remember what was the actual date. So in a way, that's something that you guys can look into. Right. Last question on: would you consider Alphabet or Google as the competition, because when they launched Gemini, right, as a competition to ChatGPT-4, I think it's early days. I think it's very hard to know whether they're gonna be successful or not. But I think Alphabet as a company will remain resilient. I think that's one thing for sure. But I think you have to keep an eye in terms of the development. It's very hard to say whether their AI will fly or not. It's something that it's just like saying, ChatGPT will fly. Nobody knows that ChatGPT will fly, right? A company with such a name, right? Who would have thought it would be so, something that a lot of people are using. I'm not sure if you guys noticed, but just now, our poster this round actually is generated from an artificial intelligence. So this is something for you guys to also take note of. All right, I think we have exceeded the time, so I'm just gonna end here. But just to summarize, so basically, I think we are both quite positive on the US market as well. But of course, I think Jeddave put a very good point, is that a lot of these companies have probably gone up a bit too fast at a too short period of time. So we might see some pullback. So you probably want to take a look into that. The top 5 picks that I have given is Microsoft, Disney, Bank of America, Coca-Cola, and Intel. And I think Jeddave has also highlighted some of the downside to these stocks as well, in terms of from a technical point of view. So if you do have any questions, do reach out to us, and keep an eye on your inbox if you are our customers, because we will sending out all this newsletter to keep you guys updated on the US market. All right. Thank you everyone for joining us. Have a good day. Have a good week. Merry Christmas.
Bye. Thank you very much, guys. Yeah. Have a good week ahead, and blessed Christmas to all of you.
Thanks. Yeah. Bye.